Welcome you all for this session. This is Dr. P. Geeta, Assistant Professor of Commerce, Sadakatulapa College.
Hi everyone. Let us all know about working capital management. To knowing about working capital management, first of all, we have to know clearly the meaning of working capital, definition of working capital, and then important concepts of working capital. The term working capital literally means the capital which is required for day-to-day working in a business concern, such as purchasing of raw material. The term working capital refers to those current assets which are convertible into cash within a period of one accounting year, and those funds needed for the business for its day-to-day operations. Here are the some definitions of working capital. In accounting point of view, working capital is the difference between the inflow and outflow of funds. Working capital refers to the funds, otherwise the capital, which a company must possess to finance its day-to-day operations. And the working capital is the excess of current assets over current liabilities. It is essential to know about the different concepts of working capital, out of which important are traditional, otherwise it is called balance sheet concept, and operating cycle concept. Under traditional balance sheet concept are divided as gross working capital and net working capital. Traditional or balance sheet concept. It is calculated on the basis of balance sheet prepared at a specific date. Here, we can find two types of working capital with the help of balance sheet. Those are gross working capital and net working capital. Gross working capital. In broader sense, the term working capital refers to gross working capital. It is the total investment of the firm in its current assets. Under the gross working capital is the capital equal to total current assets. These gross working capital includes cash at bank, cash in hand, short-term investments of concern, debtors, bills receivable, loans and advances, inventory in the form of raw material, work in progress, and finished goods. In case of manufacturing industry, we can identify these three forms of inventories. But in case of a trading concern, only closing stock we can find in balance sheet. Normally, more amount of working capital is required for manufacturing concern. Net working capital. It is another one way to find out the working capital under traditional, otherwise balance sheet concept. Net working capital refers to the excess amount of current assets over current liabilities. It is the difference between current assets and current liabilities. To find net working capital, first of all, we have to add all the current assets, after which we should deduct all the current liabilities. Then we can get the net working capital. So, here the list of current liabilities are I have given. Those are creditors, bills payable, loans and advances, outstanding expenses, income received in advance, etc. So these are the current liabilities. We have now I can summarize my presentation. I have discussed with you meaning of working capital and concepts. Under concepts, I have discussed only traditional approach. In traditional approach, I have explained you gross working capital and net working capital. Therefore, I have explained you working capital, gross working capital and then net working capital. The working capital means the amount needed for the concern to meet its day-to-day operations. Gross working capital is total of current assets. Net working capital is the difference between current assets over current liabilities. Thank you.